On paper, Bloomfield's finances look incredibly strong, boasting a AA credit rating, yet town hall meetings boil over with taxpayers angry about escalating bills. This split-screen chart illustrates a central contradiction. On the left, residential property assessments jumped 53%, expanding the tax base. This should stabilize what residents pay. But on the right, the actual tax levy required to run the town keeps aggressively climbing. If property values are soaring and commercial development is active, residents wonder why their tax bills feel much heavier than those in neighboring towns. Bloomfield's tax burden is a product of internal spending choices, rather than a lack of revenue, a fact that becomes clear when comparing its ledger to the towns next door. To understand where the money goes, we have to look at municipalities with similar demographics and economies in Connecticut, places like Windsor, Rocky Hill, and West Hartford. When we look at those peer towns, a clear baseline emerges for executive overhead. We can measure how much capital is dedicated specifically to the town manager's office and public relations. This matrix compares the administrative footprint. Regional peers operate with a single executive assistant and integrated communications. Bloomfield employs 2 dedicated assistants and 3.5 full-time roles for strategic communications. This specific public relations and administrative apparatus costs the town up to $719,000 every year. Right next door, Windsor handles its municipal communications jointly through existing departments, avoiding the cost of a massive standalone PR division entirely. The executive perks show a similar pattern. Bloomfield's executive vehicle allowance operates roughly 1,500% above the regional standard. Every dollar spent maintaining an oversized bureaucracy at the top is capital locked away from the community. Funding this executive footprint directly pulls money away from restoring the over 40 frontline service positions that residents actually interact with. That top-heavy structure influences the broader trajectory of the town's operating expenditures over the last 5 budget cycles. This bar chart tracks the compound annual growth rate of those expenses. Neighboring towns hover at a manageable 1.5 to 2.5%. The top line shows an actual expenditure of over $608,000 for outside counsel. Looking at the output, standard administrative duties, like processing Freedom of Information Act requests, are routed to private attorneys billing $250 an hour. These massive legal contracts bypass competitive bidding processes. Without requests for proposals, the town bleeds through the budget buffers that neighboring communities protect with strict oversight. As a result, standard departmental base budgets steadily inflate across the board to sustain these expensive internal operating habits. Paying premium private rates for baseline municipal tasks artificially drives up the cost of local government. That inflated operating cost translates directly into the tax hikes passed down to residents. To see exactly how this budgetary burden is applied to the taxpayers, we have to examine the town's 2024 revaluation process. This timeline illustrates the council's decision. Instead of a single-year adjustment, they chose a 4-year phase-in to spread the 30.1% valuation increase over 4 years. While sounding like relief, this delays the equalization of the mill rate. It manipulates the tax math, creating a staircase of overlapping, persistent tax increases year after year. Efficiently managed neighboring towns typically avoid this approach. They use stable, predictable revaluation cycles that keep their mill rates balanced and immediately equalized. This specific phase-in structure uniquely punishes homeowners, whose property values jumped 53%, while commercial property increases sat much lower at 32%. The phase-in creates a psychological illusion of immediate relief, while mathematically guaranteeing multi-year tax volatility for residents to fund the town's unchecked operational bloat. Reviewing this scorecard, the regional picture is clear. On bureaucratic scale, operating expenditure growth, and taxpayer volatility, Bloomfield fails the comparison. The core failure driving these red indicators is an administration treating an internal spending problem as a simple lack of revenue. The beneficiaries of this financial structure are high-level municipal administrators and outside contractors who utilize unbid, inflated departmental budgets. The people paying the ultimate price are the average property owners, who are subsidizing a massive public relations department and inefficient legal fees under the guise of necessary tax hikes. A systemic resistance to regional service sharing keeps Bloomfield completely isolated from the straightforward operational efficiencies successfully utilized by West Hartford and Windsor. A rising grand list and a strong bond rating are markers of growth, but they are undermined by a lack of internal spending discipline. Until Bloomfield dismantles its administrative bloat, residents will continue footing the bill to maintain a bureaucracy rather than investing in their community.